Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Today is the big day leading up to the big US unemployment data. Other secondary job market data has been weaker. Markets have been fighting on whether it will be a 25 basis or a 50 basis cut by the Fed in the September 18th meeting, and maybe a sharp rise in unemployment rate today may make Fed favor a 50 basis rate cut. Good morning, JK. Ahead of the unemployment rate data, what's your thought on the markets?
Thank- Good morning, Swaraj. Yes, I think maximum focus on today's non-farm payroll because of two perspectives. One, the extent of rate cut that can happen, particularly after Powell said last month that the Fed is focused on keeping the employment strong, and they are less concerned about inflation than about growth. That's one aspect. Secondly, whether actually the economies get soft landing or hard landing. This is another thing that we will come to know, because whatever we have seen as economic data in this week, they have been quite mixed. For instance, yesterday itself, we had the ADP payroll come in at 3.5-year low at 99,000. Market was expecting 145,000. We had the challenger job cuts that came much higher than expected. And at the same time, we had the weekly jobless claim that dropped to 2,27,000, which shows an improvement actually from 2,32,000 of the previous week. And even the continued claims were substantially better at 1.838 million versus 1.87 million expected. Now, this was followed by services PMI, both as per S&P Global and ISM, that came higher than expected. Though the employment component was slightly weaker, it was still in an expansion. New orders and prices paid were higher. So these data were actually contradicting the slowing economy that was picturized in the job market related numbers. So now, most of these data, of course, would have prompted dollar to recover more, but it was not able to, as yields fell to new cycle lows, 3.71 for 2-year and 3.72 for 10-year. Both bond and stock markets seem to be ignoring the positive numbers and preparing themselves for a very weak NFP data. In fact, stocks were mildly weaker, and they carried into the Asian market as well. Now, if even in leading up to the data yesterday, we had quite a few negative numbers that we had on Wednesday. We had the JOLTS data that showed the job openings being much lower, and then the removal of people from jobs, that also actually went up, which shows a weak number. But then other data are definitely not supporting that in the economy is slipping in any big way. That's why we have the all comprehensive NFP data that is due today, which will be looked at by the market. The expectation is for a much improved number of 1,60,000. This is against 1,14,000 that was seen last month. And the unemployment rate, in fact, is expected to drop to 4.2% from 4.3%. Average hourly earnings, to slightly inch up to 0.3%. So the polls show better number, but market somehow is expecting weakness in the economy to be depicted in the data today. That's why it's really preparing itself with a weak dollar, lower yields, and also the stock market remaining on the really on the defensive side. Now, this data will definitely give a final indication as to whether Fed goes for 50 basis points or 25 basis points. As of now, market is showing 41% probability of a 50 basis points hike. Sorry, the cut. On the currencies, as I said, the dollar was weaker somewhat. Dollar yen, of course, led the way. I would say weakness in the dollar yen was spilling over into other currencies because the yen crosses themselves were quite weak. No, while speaking of the global markets, I am closely following the commodities market. That really is showing a poor risk sentiment. The Bloomberg Commodity Index actually continuing to fall, and it continues at the 3-year lows. And yesterday, significantly, oil prices did not recover despite two strong supportive factors. One, OPEC decided to postpone the restoration of output, which means the output remains at the lows. And US crude stocks were far lower than expected. Normally, this leads to a big rise in the oil prices, but oil continues to trade lower despite these factors. Other commodities are trading at the multi-month lows as well. So commodities normally make a leading indication as to how the economies are moving. We know already that China is struggling. Europe is also not doing so great. All focus is therefore on US economy. If we sense that the US economy is also slipping in growth, then that be the final blow for the risk sentiment. So that's why today's number becomes all the more important. And of course, looking at our own rupee, it's kind of puzzle that rupee trades at all-time lows when most of the currencies are actually recovering for quite a few weeks now against the dollar. And yesterday's action, saw a marginal new high intraday and a marginal new high close as well, but not too far away from the known ranges. Incessant buying from foreign banks and some PSU banks was also reported, but other PSU banks were offering on behalf of the central bank. Now, the behavior of the rupee vis-a-vis other currencies is probably something that we need to note. What we can see as the change in the scenario is if there is a further precipitating move lower in the dollar index, say breaking 100 levels, central bank might allow the rupee to appreciate to avoid rising imported inflation. On the other hand, if we see a global risk off and large outflows, further weakness towards 84.50 also cannot be ruled out. But definitely in the coming month and as well as in October, which is normally known for a very turbulent month for stocks as well as currencies, including INR many years. Possibly we see move out of this very tight range of USDINR, but I think we need more indications from the global market than just the domestic side. Domestic side seems to be quite benign. Stock markets not really losing as much as any of the other markets are doing. So all in all, a crucial data ahead today and probably setting the direction for all the markets from on next week. Thank you.
Thank you, Jackie. And of course, all eyes will be on the NFP and unemployment rate from the US today. But leading into that, let's just recap what's been going on. Few contradictory signs from the US. Of course, the job market data, which is ADP and the JOLTS, were all weaker. Challenger job cuts were higher, basically showing a weak job market in the US. But of course, jobless claims were lower, while ISM services was strong. So markets are currently ignoring the positive data and pricing for a weak NFP data. And ahead of the key data today, rate cut probability for a 50 basis point cut currently stands at 41%. So that's a number we'll be tracking very frequently. For rupee, we trade at all-time lows, while most of the currencies are recovering against the dollar. So that's a very important point to note. Okay, that's it from us today. Thank you so much for listening. Have a very good weekend, and we'll see you all on Monday with a fresh round of updates. Thank you so much for listening.